What's going on, guys? Let's look at the NASDAQ 100. Let's give a market breakdown. Let's talk about the price because for a lot of long-term investors, for a lot of swing traders, and for a lot of people with those portfolios, you are in a lot of pain. Now, depending on when you've been accumulating and what your average price is, you might not be down, but I'm sure you've given up a good little hefty chunk, 10-15% of your portfolio, 20% of your portfolio, maybe even a little bit more depending on when you bought. Now, if we kind of rewind the tape, we're looking at a daily chart here, and what I was looking at yesterday, okay, was two tests of the 200-day moving average. We tested it and broke it here on the 4th. We tested it and broke it here on the 5th, and we both closed over this 200-day moving average. Okay, now if we kind of rewind all the way back, okay, we're going all the way back here almost about 9 months or so. We're going all the way back to July, August, September. You can see we kind of had the same sell pattern. We had a same sell pattern that started on July the 11th, and it kind of finished here about a month later, okay, on the 5th of August. And you can see we broke the 200-day moving average, and then we got above it, and we came back down, and then we started a nice buy cycle that lasted the better half of 6, 7, 8 months, okay, with some small pullbacks along the way, but ultimately going higher into the right. Now, we are back in this range, and we're testing yet again. Now, what I thought was that we had 2 days of consolidation down here, and yesterday was the first day that we did not close below or break the prior day's low. And the 200-day moving average has shown in this whole strong upwards move that is acting as a very, very firm level of support. Will that all change today? We have now broken below the previous day low, and we actually wicked below the weekly low. And now that we are trading below the 200-day moving average, the bulls are very, very, very time sensitive on what they do with this price. Because if you get any type of bounce into 20,400, 20,600, and you start to confirm the lows and we start to actually build below this 200-day moving average, look at what happened here once we lost that 50-day moving average. So the most significant moving averages that you need to kind of watch for on a macro level is going to be your 50-day moving average on the daily and weekly, and your 200-day moving average on the day on the weekly, and your 50-day moving average on the weekly. Now that we've closed below this 200-day moving average, a lot changes here. So again, we have been sell-sided bias for the better half of a couple of weeks. There's been some amazing traders on the stock side. I mean, essentially, Tesla's just been, short below prior day lows for I don't even know how long now. Tesla's down about 45-55% from all-time highs. So again, when you look at some of these names, any gap up, okay, any gap up needs to be treated as nothing more than a dead cat bounce. Nothing more than a dead cat bounce until this market reclaims, meaning it closes over its 5-day moving average at a bare minimum. That's a bare minimum, guys. And that bare minimum is sitting at a price of around 20,400. So we're about 350, 400 points off today. Today we sold off, from high to low, it was a 600-point range day, very significant day. But until we close over 20,400, we can't even begin to say that the bulls are in any type of control of the chart whatsoever. So any gap up, look for it to get faded into daily 4-hour or 1-hour supply. Look for those confirmations back to the downside, especially this level here. This is our line in the sand. We've got nothing below here. Okay, this is our daily chart. Notice how nasty the chart looks, right? It's like if you're looking at it, you're kind of wondering, what the hell's he got going on in this chart? Just don't worry about that right now. Just worry about all this nastiness. All these squiggly lines are above where we're currently trading. What that's telling you, we've got a lot of resistance. There's a lot of work to do for the bulls before they even get anywhere out of the murky waters. So if we bounce into any one of these lines, because the sellers are in such deep control, you can get these bounces and you're in a scalp and you think the selling is over, and then all of a sudden in an instance, from one candle to the next, we're selling off again. That's because the sellers are in control. If we lose 20,000, look out, right? We've got a lot of room to go. And I've got to pull up a weekly chart to kind of actually tell you where we can go. So today on the weekly chart, I'm going to remove this line now. On the weekly chart, we have now officially tested the 50 SMA on a weekly time frame. This is why the bulls are so time sensitive. If they start to close a weekly candle below this 50-day moving average, guys, look what happens. Look what happened when we closed below the 50-day moving average on a daily time frame. We started a 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. We've started a 2-week sell cycle below our daily 50-day moving average. So this is a daily chart. Imagine what's going to happen to this uptrend if we close below this 50-day weekly. We could potentially start not a multi-week sell cycle. We could potentially start a multi-month sell cycle, which would put the market into a bear market. Now, going back all the way to 2023 and even beyond, okay, we have held the 50-day moving average for the better half of a year and a half, almost 2 years, okay? It's going all the way back to March of 2023, which is about 2 years ago now, where we have been trading above this 50-day moving average, okay? We've tested it here in October of 2023. We tested it here in August of 2024. We got pretty darn close to testing it here in September of 2024. And here we are in 2025 testing it again in March. In order for this uptrend, this is still a bull market, but in order for this uptrend to hold suit, the buyers need to start stepping in very, very quickly. What is it going to take? It's going to take some type of catalyst. It's going to take something to happen and things to wear off and die down or change for the better with the trade wars that we have, with the tariffs. You know, there's a lot of things going on here with President Zelensky and Trump and Putin, with the whole Russia-Ukraine thing. There's a lot of things on the table, and I'm just barely scratching the surface, you know. Tomorrow we have Jerome Powell speaking. We need to see something with the interest rates. We need to see, you know, the jobless claims came out today. There's a lot of things here that are impacting the market, and the market is very skittish right now. A lot of people are fearful, and I'm not talking about normal folks like you and me, but a lot of hedge funds, a lot of banks, a lot of big money is a little fearful right now and call it an overreaction. And we will call it an overreaction when we're trading at all-time highs again. Everyone's going to say, oh, it was just an overreaction because we didn't know. But let me tell you, that's what the markets do. They overreact first, they price in first, and then we follow through, okay? So if we are trying to potentially price in maybe Trump steamrolls us into a recession, they're trying to price that in. Maybe, you know, there's bigger problems in Russia and Ukraine, they're trying to price that in. Maybe this trade war with the tariffs goes back and forth for much longer than expected or anticipated. We're trying to price it in now. Remember, banks and hedge funds are always going to price in 6 to 12 months ahead of time. Okay. So by doing that, they are pricing in a lot of this news and a lot of this stuff as we digest right now. So as things turn around and as it's not such a big deal anymore, and as things start to get better, and as everyone starts to realize it's not as bad as we think, guess what happens to the market? We start to explode to the upside, right? We explode to the upside. Now, I still believe that we do explode to the upside, but it's getting very close on my fear indicator, my personal fear indicator here, that if we do start to close below this 50-day moving average, we don't have any support all the way down until 19,000, okay? Below 19,000, you're looking at 18,000. Below that, you're looking all the way down at 16,000. That would start a multi-month downturn. And it's been a long time, almost 2 years, since we have tested our rising weekly 200-day moving average, okay? So if we do decide to test that at some point in time, that would take us all the way down to 17,000. Now, if you look at where we have gone since all-time highs of 22,000, okay, down to 20,000. This is about a 2,500 point drop, okay, about a 2,500 point drop. And this drop has lasted the better half of 3 months. So if we are to do another drop like this, it's going to last at least another 2 to 4 months. That would take us all the way down here, right? Another 2,400, 3,000 points down is going to take us from 20,000 all the way down to around 17,000, which is going to be somewhere floating here in the middle, right? It'd be taking us right about here. And hopefully we can get this 200-day moving average to start curling up. But that would be a move something like this, right? And that would be a very strong correction. Right now we are already in correction territory, being down more than 10%. Again, official bear market is classified at greater than 20%. And if we did do this drop, right? Whoops, that's really big. If we did do that drop down into 18,000, 17,000, that would put us well into bear market territories. Now, the only thing is that if you look around the neighborhood and you look at some of the big tech names, things like Tesla are already in a bear market. You know, things like Nvidia are already getting to a bear market. Things like AMD have been in a bear market. You know, a lot of these names have been in a bear market, right? They're down greater than 20%. Not everything, but a lot of things. So what that's telling you is that maybe the overall market, meaning the index, meaning the whole NASDAQ, does not need to get down here before we start to rally. A lot of those names, those corrective names, just need a little bit of a kickstart to start pushing back up, and that's going to completely bring the entire market back up, which again, this would be a very strong and a very healthy correction. So I am looking between the next 1 to 2 weeks for something very definitive to happen. Either we sweep this 50-day moving average, maybe with another 2 to 3 days worth of selling spread out over the course of a week, and we reclaim this 50-day moving average and we start pushing up towards the end of March and April, or we have a little bit of a dead cat bounce right here, right now, that lasts about a week, and by 2 to 3 weeks, we fail to really get back over 21,000 and we're trading below the 50-day moving average. That is going to put me on bear watch for the next 3 to 4 months. That's potentially going to take us from May, June, July. Okay. And I don't really see anything changing until August, probably September, October area. So again, depending on your timeline, where do you want a dollar cost average in? You want to do a little nibbling here. You would want to do a little bit of nibbling down here, and you would definitely want to do all of your big work down in here if we got there. Again, I'm speaking worst case scenario. Again, for the better half of 2 years, let's respect this weekly 50-day moving average. We respected it once here, twice, 3 times, 4 times. Let's respect it. Also keep in mind though, the more times you test something, the weaker it gets. So keep that in mind. I would love to see the market turn around from here within the next 5 to 7 days. Let's turn around from here, even if we've got to go a little bit lower and squeeze out some more people. Give this whole every debacle of everything that's going on so fast, give it a little bit more time to digest, and then let everyone start to come around and say, hey, you know what? This was a healthy correction. We've brought a lot of prices down. They're a little bit more valued at where things should be. And let's get back into this raging bull market. Remember, we are still in a bull market. Okay. Corrections of 10 to 12, 10 to 13, 10 to 15% in a bull market are 1000% healthy. Now think about this. The stronger the correction, sub 20%, the bigger the move is going to be. Okay. So this next move, even if we're down 10 to 12% here, if we come down into this range and we're down about 13, 14, 15%, that move coming out is going to be significant for that next leg higher. That next leg higher is going to be very, very significant. So that's where you're going to want to be. There's going to be a lot of people that are going to get rich here and a lot of people that are going to get very, very wealthy and rich there. Okay. Let's see how this plays out. That's my analysis. I hope you guys are staying safe out there. I'll catch you guys on the next one.